Let me ask you a question. If I told you there was a business where 93% of customers lose, the house makes guaranteed money no matter what, and people keep coming back convinced this time will be different, you'd immediately assume I'm talking about a casino, right? And honestly, that would be generous. Because at least in a casino, the rules are honest. You already know the odds are bad, you know the house edge is baked in, and no one pretends roulette is a career path. But the same can't be said for what I'm going to show you today, and that's because it's worse than a casino. But before I jump in, just a quick preface. I know I usually make videos about market news, investing, and all the fun ways capitalism can quietly rearrange your future while you're microwaving leftovers. But what I'm talking about today is so widely accepted, so normalized, and so clearly a scam that I couldn't not make a video about it. So stick with me until the end, because once I lay this all out, I think you're going to feel the same mix of shock, anger, and disbelief that I feel. And if you like these styles of videos, let me know in the comments, and I'll make more. Because the finance industry is full of scams, and the one we're talking about today is hiding in plain sight. I'm talking about proprietary trading, or as it's more commonly marketed, prop trading. And before you start typing your comments, I'm not talking about the glamorous Hollywood version of trading where some hoodie-wearing savant turns 10K into $1 million while drinking espresso and whispering alpha into a Bloomberg terminal, because that version of trading is 1 in a million. In this video, I'm talking about the more common version, the retail-facing version, the one with challenges, profit targets, drawdown limits, and Discord servers full of people posting screenshots of green days right before they disappear forever. And if you think this is just some niche corner of finance, it's not, because prop trading has exploded in recent years. And only 7% of prop trading accounts manage to turn a profit, and of those 7% of traders that do manage to turn a profit, the average return is about 4%. Let that sink in. Because let's say you beat the odds. You're disciplined, you're consistent, and you have an actual edge. You make it into the top few percent of traders who earn that 4% return. But then, at that point, the question becomes, was it worth it? And the answer is overwhelmingly no. Because 4% doesn't just underperform the S&P 500, it underperforms gold, real estate, and even United States treasuries. Meaning you can be a prop trader and stress so hard your hairline needs a trip to Turkey, pay mind-boggling fees, and spend years chasing profitability. Or you can do absolutely nothing, take nearly zero risk, get favorable tax treatment, and earn a comparable yield by just buying US treasuries. Because a 4% return isn't just underperforming, that's essentially matching the risk-free benchmark. So if the odds are this bad, the returns aren't impressive, and the alternatives are objectively better. Why would anyone do this? And the answer is simple: social media. You'll see the same stories on repeat: a rented Lamborghini, a broccoli-haired teenager flaunting money, and a P&L screenshot with no context.